There we go. Well, good morning and welcome to a caregiver webinar from Family Caregivers of British Columbia. Today, we're going to be discussing tax information and financial resources with our panelist, Shelby Parkinson from Liberty Tax Services. I'm Victoria Lougheed. I am the Education and Learning Lead with Family Caregivers of British Columbia, and I will be hosting along with my colleague, Carla Wilson, who's our Communications Lead. Carla will be handling the chat, and I will be navigating the slides while Shelby gives a presentation helping all of us get a better understanding of the tax information out there, recent changes, and things that caregivers can do to make things a little bit better for ourselves. Okay, so I'm just going to launch into the presentation and move forward. I'm going to try and keep my mouse out of the way.
Don't worry about it.
I did a recording the other week and realized my mouse was in the way for about half of it. It was very frustrating. All right, so I'm going to start by just talking a little bit about Family Caregivers of British Columbia. We are a nonprofit charity dedicated to the well-being of family caregivers. First of our kind in Canada, we've been doing this for more than 30 years. Since 2010, we moved from being a provincial or a locally sized organization up to provincial, and we now cover the entire province, trying to provide supports, resources, and services to assist caregivers in their role, as well as connecting with Ministry of Health through the Patients as Partners initiative. So what do we do? That sounded really great, but what does it mean? Well, we provide caregiver support through information referral and navigation. We also provide one-to-one caregiver coaching. If you contact our caregiver support line, you'll be assessed, and if your needs are such, we will connect you with a one-to-one caregiving coach. We also offer support groups, both online, and we're back to in-person support groups now, which is really exciting. And we have quite a lot of online resources available for caregivers. In terms of education, like I mentioned, we provide online resources through our Caregiver Learning Center. We have webinars, workshops, podcasts, videos, events, and presentations available on our website in the Learning Center. When it comes to collaboration and engagement, we work hard towards health system improvement. We participate in research wherever possible, and we try to inform policies by participating on boards and in any initiatives through the Patients as Partners initiative with the Ministry of Health. So before we get started with the webinar, I want to just touch our webinar rule of thumb. Confidentiality is essential in the webinar. Everything you say in here will be respected and kept in the webinar. Everyone has the right to take part in the webinar. Feedback is welcome. If you have any comments that you'd like to make or questions that you have for Shelby, please put them in the chat. Carla will be managing the chat. And at the end of the presentation, we will start with the list of questions from the chat, as well as ones I've received from email over the past week or so. Keep in mind that everyone's experience as a caregiver is unique. Caregiving is one of the things we have in common, but how unique to each of our situations. And so one person's experience may not reflect your own. Some of the examples that Shelby will be providing may not specifically meet your experience, but what we're trying to do is give an overview today. Do comment in the chat, do ask your questions in the chat. Please keep your mics and videos turned off though. Okay. So today's learning objectives, we're going to look at what a caregiver is for tax purposes. We're going to talk about the caregiver tax credit, the disability tax credit, medical expenses, and how those can be accounted for through your taxes, residential care expenses, and then other facts and tips. Questions will be at the end. I'm just going to introduce today's panelist. Shelby Parkinson is the owner of Liberty Tax Service. She has been a franchise owner since 2009 and owns 2 offices in Victoria. Shelby, is it 2 or 3 now?
2 now.
Okay.
Yeah, I did have to close one because of
Well,
staff.
you're right. We were talking about that earlier, how difficult it is to find staff right now. Yeah. She keeps up to date on tax matters through continuing professional education. Shelby is active with the Victoria Chamber of Commerce and with a number of local organizations, including the Victoria Grizzlies and Young Life and Family Caregivers of BC. She's been volunteering for us for a number of years, reviewing documents. This is her second webinar that she's doing for us. So she's been a big help here as well. Before launching Liberty Tax Service, Shelby worked for a number of nonprofit organizations across Canada. It's funny how we always find our way. If we have that nonprofit bug, we always end up back here. All right. So first things first, we are going to talk about tax credits, and I'm going to hand things over to Shelby and put myself on mute so I don't sneeze or something. Have at her, Shelby.
Okay, so as Victoria said, I'm being fairly general, and a bit later on, I'm doing sort of some scenarios. So I'm not really able to talk to specific circumstances on the webinar, but this is just some of the kind of generalized stuff. And hopefully, if you're new to the caregiver credit this year, then you'll have some of the kind of stuff ready before you try to file your taxes. So first of all, just caring for someone doesn't necessarily cut it in the tax world. So it really does depend on whether or not you can claim what we call the tax credits on your own return. The way to sort of look at it, and this goes for some other tax credits as well, like tuition transfers, for instance, and a few other things. The tax credit is the person who has it. So like the person in care, it's kind of their tax credit in order for them to give it away to the other person who needs to use it. So it's really important that that's kind of the clear concept, if that makes sense. The person has the tax credits, they can kind of give them away to the other person. So it really kind of depends on a lot of different things, like the income of the person in care, and then whether or not CRA recognizes the sort of status of the person in care. And there's a little bit of leeway with that now. But generally, there has to be some documentations. And so the biggest thing is the disability tax credit, which we are going to talk about in a little bit. And so the other thing that I highly recommend is that when you are doing your tax return as the caregiver, you also at the same time do the tax return of the person in care, so that we know to what degree the tax credits can be transferred. And I think that will come a little bit clearer in the next couple of slides, where I have some examples of situations. So perhaps we can move on to the next slide. Yeah, so these are just some of the Canada revenue definitions. We can go through those. Yeah, one thing that came, I'll just say quickly, one thing that came into play a few years back is that living in the same household is no longer a determinant. That was taken away several years ago when there was some kind of bigger changes made to the caregiver credit. So that has actually been a real good move on the part of the government. It has made it much easier for people. I mean, it really reflects the reality of society that if you are a caregiver, it doesn't necessarily mean the person is living in the same household with you. Alrighty, shall we go along? All right. Oh, Yeah, these are just the line numbers. I tend to talk in words, not line numbers. Again, it's age and living in the same household aren't determinants. What is important is the income of the person in care. And also there has to be some kind of proof that they need care, whether it is through the disability tax credit or through a statement from a doctor or nurse practitioner or some other medical person. So there we go. So this is just a little one scenario of somebody who is older. So we have George, who's 81, and he has the disability tax credit, and his daughter cares for him. So he has kind of just general pension income of the old age security, some CPP, I think, and he gets the guaranteed income supplement. So his total income is $22,866. And Sheila works full time and is married. As we kind of go through this, and again, without being kind of too technical, the guaranteed income doesn't count towards taxable income. So George's taxable income is only just over $15,000. And that means that he owes no taxes, which is pretty typical of an older person in George's situation. So his daughter Sheila gets to claim both the caregiver and the disability tax credit transfer, because George doesn't need it. His taxes are already at zero. And again, I'm not going to harp too much on the math of it because that's kind of boring. And the point is that Sheila gets these two very nice tax credits. So it will help her out a lot on her taxes, and she can get them because George doesn't need them. If George, for instance, had some more pension income from, a pension he earned while working or something like that, then his income, and I just said $10,000 for the sake of a round number, putting his income up to 25, almost 26,000, then Sheila could not claim the caregiver because his income, George's income, is a bit too high, but she could still get some of the disability tax credit transfer. So this is where it sort of shows the key. The key is George's tax credits, and he can give some over to Sheila, what he has to give. So we really need to do George first and then do Sheila so that we know exactly what the situation is. So generally, as I said earlier, it's really important that like both returns get done together. So then we know the right amounts to do. So rather than, doing George's and then Sheila says, oh yeah, George says I can have some tax credits, is better if it can just be done at the same time. And I don't say that just, to try and get more business or anything like that. It's just much, much easier if we know the whole family situation, even though clearly they're two separate tax returns. This would be the same if, say, yeah, so this is a fairly typical scenario that I come across during tax season is, an elderly mom or dad and, an adult child who is in their working years, but still looking after their parent. So that's one. Oh, okay. I thought I had a child one. Anyway, the biggest thing is a disability tax credit. And I'm sure that most people who are listening to this webinar are quite familiar with the disability tax credit. both applying for it and getting it on behalf of someone. It has changed a little bit this year. For 2021, if you have to apply starting this year, the form is now 16 pages long, and it has increased quite a lot in the information the doctor or nurse practitioner has to provide. So it has changed for anybody that has to perhaps renew it or apply for it. And in theory, and I say this, in theory, the doctor's office or the nurse practitioner's office can actually fill in their Part B, and they can download this electronically from the CRA and fill it in. In practical terms, mostly what I do is I print out the 16 pages, give it to my clients, tell them to take it to their doctor. He fills it in, they bring it back to me, and I send it in electronically to the CRA. Goes through much quicker, much faster. And the other really, really important part of the disability tax credit is if you are filling in the form new, make sure that there is a part up in the beginning part where it can be transferred to somebody else. Like, for instance, if George had to fill it in again and he wanted to make sure that his disability tax credit was transferred to Sheila, he can fill that in at the top, and then CRA gets it recorded that he is good with giving his disability tax credit to Sheila. Sheila can't just take it without having it officially given to her. So that's another thing that we often run into, is we have to kind of send more information into the CRA to say, please transfer, you know, so-and-so's disability tax credit to their son, daughter, other caregiver, and do that so that the person that is claiming it on behalf of someone else is actually registered at the CRA. The CRA will not accept it unless the person claiming it is recognized. So that's, you know, quite an important thing to do, and we help people do that. I've kind of staggered a little bit from what's on the screen here, but yeah, the disability tax credit is really, really important. So even if it's not helping the person that has it because they're already not paying any taxes, it opens up, as it says here, quite a few doors to other kinds of things. So yeah, the disability savings plan is good, especially for younger people, less so for elderly people, but it's very important for, you know, people with a child or something like that. And yes, then also if you have, you know, a 20-odd-year-old or 30-odd-year-old, for instance, working, and they have the disability tax credit, it does help an awful lot on their taxes. And it can just open up quite a few other kinds of doors to other things. In the case of a sort of middle years person with the disability tax credit who is actually working, it's unlikely they're going to transfer it to somebody else, but it's important for them too. Yeah, and now doctors and nurse practitioners can fill in the disability tax credit. So that was an important change too, to open it up to nurse practitioners. And there's a variety of physicians that can do it. It doesn't just have to be a family doctor. There's quite a long list. It can, but somebody that is recognized as a medical professional. All right. I don't know if we need to go into all of the kind of ins and outs of what it is, because that's really between the doctor and the person. Most people are fairly aware of all of this stuff. The 14 hours a week medical need time is a lot of that is for people with diabetes, to be honest. That's a key one, because they spend a lot of time managing their illness, even though they on the surface of it look like they can live a relatively normal life, but 14 hours a week is a lot of time to spend managing something like diabetes or some other kinds of illnesses like that. Most of the other stuff is, yeah, there has to be a marked difficulty doing things. I haven't seen too many of them get turned down. So, all right. There we go. I kind of went forward to do this. If you do send it off by mail, the disability application, it will take a while. It's much better if you can find a way to do it electronically. If I can be, like, for in my business, I get all my clients to make me their rep with the CRA. It's a authorization form that we fill out and send in. Then I can send it in electronically on their behalf, and it gets done in usually about 8 to 10 weeks versus months and months if it's mailed in, because CRA does not like mail. Yes, this is another important little point about the disability tax credit. Is it is entirely, it's a federal tax credit, which means it goes to help reduce taxes that one pays. So if a lot of people, for instance, will come in and see me and say, oh, well, I have, you know, a CPP disability benefit, but that's not the same thing as having the disability tax credit. The disability tax credit is entirely separate from receiving some other kind of, quote, disability payments, whether it's through the provincial or federal governments. It also, for people, does not necessarily mean that they're going to get a big tax refund or anything like that, because for a lot of people who are on a disability benefit, for instance, and have the disability tax credit, it doesn't necessarily do anything for them because they don't pay any taxes anyway. So you can't reduce past zero. And if you haven't paid any taxes, then of course you don't get any taxes back. So it tends to be neutral, but it's still important because it does access perhaps some of the other benefits. And then also, depending on the situation, it can be transferred to someone else who could benefit, the caregiver specifically, that can do it. So over the years, it has become a lot clearer in people's minds. When the disability tax credit first came out 10, 11 years ago, there was, you know, a fair bit of confusion. And then there was some of these less than ethical companies that, you know, promise great big huge refunds to people. But it's important to remember, if one does apply for it, say now when it goes back in time, the money that you would get back, or the refund that you might get back, is only if you actually were paying taxes. Because again, you can't reduce past zero. And if you didn't pay anything, then you don't kind of get anything. So that's kind of gone through the wash a little bit. The government has recently cracked down on the companies that were, you know, online pushing the disability tax credit and doing it on behalf of people, and then taking, you know, 30% of the refund, kind of promising big money. So that's now illegal. They can't do that. All right, we are going to get to the full-time care down the way. I just see a little note come up. And so there's specific rules. I'll just kind of veer off onto that for a second. There are specific rules on being in full-time care and the disability transfer. You can't necessarily do both, but I can come to that. So with medical expenses, generally, they are very valuable. They can be very valuable for people who are caregiving, or for people who do have especially mobility issues, because of course it's quite expensive. So the medical expenses do have to be over 3% of net income. And CRA does have a really, I will say for the CRA, they have a very good list on their website of what's allowable and what's not allowable. Medical expenses are one of the things that are often what we call reviewed as opposed to audited. Audited is a whole other world and sounds really scary, whereas a review is CRA just wants the receipts. So quite often medical expenses are asked for. So keep the receipts is what I would suggest. And then you're going to be all in order when you're asked to do it. I can't remember if it's coming up, but one of the things for that could be very useful is if you had to renovate, for instance, because for wheelchair access, or a bathtub, those kinds of things, which are very expensive. Now one can actually double dip in a way on some of those kind of accessibility things. And so you can have it as both a medical expense, and then there is a separate tax credit where one has to actually renovate for accessibility. So that is quite a nice little recognition of the cost of actually renovating in order to make a home more accessible. Like the common things are like wheelchair ramps or bathtubs, or stair lifts, that kind of thing. Anything that makes the house where the person has to be living there more accessible. But yeah, keep the receipts because they would be asked for. All right, shall we? So if the person lives with you and you're trying to claim the medical expenses, this one can get a little bit tricky. Again, this is where it's really important to file both at the same time. So some of these medical expenses have to be, it's going to go to the 3% income threshold of the person, of the dependent person. And you have to be able to prove that they actually paid for it. So, then it's kind of hard to explain simply, but you just have to be careful that you try to keep separate receipts for each person. This is less with the renovation stuff. This is more with things like prescriptions and stuff like that. So the caregiver has to prove that they paid for those expenses themselves. So if you have dad living with you, or if you are paying dad's expenses for, for instance, prescriptions and stuff like that, just make sure that it's clear that you have paid for them and not dad. Because that's one thing that CRA does look at, or like home care or something like that. That's another one that's fairly common depending on the situation. So the caregiver has to be able to prove that they paid, not the person. Now, where do you start with applying the disability tax credit? Sorry, I'm seeing some of these. You start with your doctor or the person's medical person, a nurse practitioner, a doctor. That's where you start. And the form is called 2201, and it is online with the CRA, and it's 16 pages long. So yeah, the place to start is with your medical team. All right. April, yeah, make an appointment with the doctor and go see them. Yep. Oh, you live in another city. Well, try to arrange it, I guess. I don't really know the specifics, but if you can get someone to take the person to the doctor and get them to do it. I mean, all the doctor's offices now have been doing this for quite some time, so they are aware of it. They usually do charge a fee, which is a medical expense. I would just suggest that you try to find someone to take the person you're asking about to the doctor and make the appointment to get the form filled out. And then perhaps, unless they have a tax preparer, okay, so residential care. No, you don't have to get the form filled out every year. Generally, CRA will say that it has a date, starting from whatever year and going. Some of them are permanent. Some of them have a 5 or 10 year time limit on them. But no, it's not something you have to do every year typically. So there was a bit of an earlier question about residential care. So this is one of these bureaucratic things that privately drive me nuts. So you have one of your family members in, full-time. Yes, it is. The DTC is available across Canada. Yes. So if you have someone in residential care, clearly they have to be there, and clearly the doctor has sent them there. Nobody just checks into full-time residential care. So the rule is, though, that to claim the residential care expenses, which are often, fairly high, one can claim either the full nursing home expense or the disability tax credit, but not both. So you're going to claim the one that's higher, obviously, and generally you're going to claim the nursing home expenses as a medical expense, because almost all the time that's the higher one. However, in order to claim that as the medical expense, the person has to have the disability tax credit. So they have to be recognized at CRA with the disability tax credit, or be prepared to have the doctor write a letter saying that they have to be there. And you have to have the receipt. And it kind of drives me nuts, because clearly they can't be in residential care unless they're sent there by the doctor, right? So that's just my little bugaboo with the CRA, that they want all this documentation as to why the person is there. But as I say, nobody checks themselves into long-term residential care because that's just not the way it works. Anyway, we often have to send in the residential care receipt. It's not a big deal. I mean, it's all fine. It's all good. So so if a person who goes into the care has the disability tax credit, if they've been there the whole year, generally we just claim the whole cost and not the disability tax credit. Sometimes you can only claim a maximum of $10,000 and the disability tax credit. So depending on the time of year that the person, started in the residential care, sometimes it's more advantageous to claim the disability tax credit plus some of the plus if it's under $10,000, the residential care. Generally, if a person is in residential care for a year, it's going to be more than $10,000. But that little bit is the key. No, they cannot be transferred to the spouse. Well, actually, that's not necessarily true. So the nursing home stuff is mostly going to be on the full residential care, as they say, unless they went in partway through the year and it was under 10,000, then we would claim the disability plus the nursing home care. So yeah, it's sort of, I'm getting kind of caught up in my words here, but it's fairly clear on the residential care. And it is quite different than someone, and this is long-term residential care, which is different than somebody that might be in a partial care where they have some what we call attendant care. But the residential care is people who are in 24-hour nursing home care. All right, can we move on to the next one? Yeah, definitely, as we have talked about, the disability tax credit is, one of the most important things that one should have. And for people who are younger adults or in their sort of midlife stuff, there is a disability support credit that one can use, although a lot of the things that used to be in this particular credit are now considered medical expenses because CRA has expanded the medical expense stuff. I think they're trying to simplify things more. So simplify things more so that it's all under the medical expenses rather than having all these other kinds of forms and stuff like that. Because the Braille devices and all of that kind of thing are now considered as a medical expense. So again, though, the person has to have the disability tax credit, but that's not going to be an issue for people that need, these kinds of things like Braille devices or optical scanners or supports like that. And I would guess that most of those disability tax credits would be a permanent one. I can't say that for sure, but mostly CRA is going to recognize that on a long-term basis. But again, some of these, the key is having income, right? So, because, tax credits only work to reduce it down to zero, your taxes down to zero. So again, this is just coming back to checking on a person's income. And most of that stuff is all on slips and things like that. When I wrote this back when I was trying to think of all the different slips and stuff like that. Sometimes if a person has like investment income, or if there's, a taxable investment stuff set up for them, the investment income is slower coming out to people. T3s and T5s are the stuff showing interest or dividends or capital gains or what have you with the investments. So those slips, they're only starting to come out about now for people. So sometimes it's worth waiting till later in March or even early April to file the tax returns to make sure that you have the investment stuff. I'm not sure how much really investment stuff people would have, but it is something that's important. And then also for if someone's trying to file it as like the caregiver and stuff, their income is important too. So sometimes it is better to wait a little bit certainly past the end of February before a lot of the slips are available. This year, the slips have been very slow showing up on the CRA website. Don't know quite why, but the system is just a system. It is possible to call the CRA some of the time. They have said that they've put more phone people on. I would tend to say that it is often quite hard to get through, but it is worth it to try if you really do have a question. I would just remind people that some of the agents at the CRA are excellent, and I will say that some are really good, some not so much. It's just like any big organization, and I think they too have staffing challenges. So when you do call that 1-800-959-8281 number, you have to actually listen to a whole ton of information and make all the right picks to start with, and then you have to put in a lot of information. And the other thing with it too is they won't necessarily talk to you about somebody else. In fact, they won't talk to you about someone else unless you are recognized as a representative for that person. So if you are trying to do your tax stuff yourself on behalf of somebody else, I would say that you need to get recognized as a person that can talk on their behalf. And I mean, I do it as the business because we get people to sign what's called an authorization form, and then we send it in and we get kind of instant recognition with the CRA. If you're trying to do that yourself, it can be a little more cumbersome, and it sometimes does get into questions about the person being able to even sign the form. So then you have to include a power of attorney or something like that. CRA is, very concerned with giving out information because they're on the other end of the phone line, and I do understand this. So they ask a lot of questions before you'll get anywhere. So unfortunately, sometimes trying to phone them is a bit of a frustrating exercise. But it is possible. And the same with the benefits. You would have to be recognized to phone about somebody else's benefits. The website is pretty good. It can sometimes be a bit frustrating because it's so big and there's so many different things. But I think, yeah, I was looking at the Caregivers website here, and it is, really good. It does provide a lot of really good information. Yeah, I don't know what else to say. It is frustrating trying to talk to the CRA. I avoid it as much as possible. And yeah, 2-hour waits are not necessarily unusual. And that's kind of a lot to ask someone to sit around for 2 hours. Unless you're going to watch a movie or something while you wait for the representative to come on. It's very busy right now on their phone line. So try to avoid phoning unless you really have to. So I did see quite a few questions there, and sorry, I got a little distracted answering some of them, but maybe we can kind of maybe get some general categories of questions or something. Victoria, what would you like?
Yeah, you bet. So I've got quite a few questions that came in through email ahead of the webinar. So what I'm going to do is I'm just going to stop sharing the screen, and that way we can see ourselves again. It's a little bit better. And I'm just going to go and find my list of questions, and we'll start with those, and then anything that Carla has collected from the chat. So I've got a couple. The first question that came in was, can I just add all the Visa medical charges and give that to the person doing my taxes?
As long as you could back up the Visa charges with an actual receipt. And again, it would be depending on amount. Because if CRA does ask for receipts, they won't take just a Visa charge. They'll want the actual receipt. Like they won't take just a Visa statement or something like that. They need to see the actual receipt from, whatever the medical thing was.
Right. So it can't just be your Visa statement. It has to be all of the receipts plus your Visa statement kind of thing.
Yeah. What I like, if I was, your tax preparer person might, know you and trust you and know that that's correct, and look at the Visa statements and know that that's correct. But they would always probably say, as long as there is a backup that you have access to if you were to get asked. So as long as you can justify the Visa statements, you don't necessarily want to be able to print out all of those receipts and stuff like that, because everybody keeps everything, digitally now. But as long as you would be able to provide those should you get asked, would be my advice. So use the Visa because it's simpler and quicker, but know that you may need to be able to provide documentation.
Okay, that sounds good. The next one I had from email was, I think this one's a bit of a long one. Could you please discuss the Canada Caregivers tax credit when doing your taxes?
Oh, well, I kind of thought
we did
discuss that a little bit because yeah, that was kind of part of the seminar. It's something that has to be done on the income and the situation of the person. So there's no real, I mean, I can't give a specific answer to a specific situation, but we did give a couple of examples of things. So they're transferable as long as they're recognized to be transferable and as long as it is dependent on the person's income.
Okay, that makes sense. Okay, so next question. This one's got a bit of a preamble to it. Regarding home care in our principal residence, the CRA website, Attendant Care and Care in a Facility, Canada.ca states if you are receiving attendant care in your home, you can only claim for the period when you are at home and need care or help. For an expense to be eligible as a medical expense, you must either be eligible for the disability tax credit or have a written certification from a medical practitioner that states the services are necessary. If we have not yet applied for the disability tax credit but plan to, can this expense be applied to next year's income tax file?
Bit of an answer to that. No, medical expenses have to be done in the year. Like there's a year thing, you can't hold them over. Two things. One is as long if CRA was to ask, as long as you could give them the doctor's note saying that it was necessary, then you don't need to worry about the disability tax credit. So I would say that depending on what the amounts were and stuff, go ahead and do it, because you really do have to do it this year. And know that if CRA was to ask, you would be able to get the information from the doctor to support that. Then separately do the disability tax credit application. Generally, CRA can make them retroactive. Okay. So then, like if in the interim between you applying and getting it and then CRA asking you've got it, then you're covered there too. But yeah, no, you have to claim them in the current year. You can't save them. But okay. I think you wouldn't have, just based on the question without seeing everything or knowing the whole situation, I would think the person would be covered, and as long as they can justify it. Okay.
There was an addendum to that question regarding the caregiver credit. Same question. If not applied for this year, can I carry it over to next year?
No. Nope. Use it or lose it.
Use it or lose it. Okay. So Carla has been direct messaging me the questions that have been coming up. First one from the Q&A. We live on my and my wife's government pensions. I'm classified as disabled. My medication costs me $5,000 a year. When I submit my taxes, I do not get anything back, wondering why. My donations are also about $3,000. Total income for the household is about $43,000. This might be a bit too specific.
Yeah, that's a little bit specific. I think it's going to depend because like you may not be owing any taxes if you're pension splitting or something like that, just my guess. So if there's pension splitting and things like that involved, you may already be at zero taxes. Okay. And so I don't know if you're paying taxes too, because once like you can't go, all of these things like donations or the disability tax credit or all these things reduce the taxes you owe. If you can't reduce them past zero, right? That's as low as one can go. So you can only use up enough to get you to zero. And of course. And so like probably from the sound of it, they might have enough tax credits amongst the two of them, and pension splitting perhaps, or even just the pensions from the governments would be less than what they would owe in tax. So in terms of like donations, for instance, they're not going to help you necessarily with your taxes because you're already at zero. But again, donations tend to be something important. The donations can be saved for 5 years. That's one tax thing that can carry around. So sometimes depending on things, they can be useful down the road if the income changes or stuff like that.
Okay. So another question, my wife has advanced dementia and has been in full-time care for many years, requiring everything to be done for her. We both have significant income. CRA has accepted the total cost of long-term care for years in the medical expense area of her tax return. And we also claim prescriptions and other medical expenses that are not reimbursed. Am I missing any disability or related tax benefits?
No, because you can't claim both those
Right.
long-term care above 10,000 and the disability tax credit. So yeah, no,
Yep.
you're
Doing it right then.
doing it exactly right.
Okay. Next question. What is the working income tax benefit disability supplement and how is it calculated? Is this on top of the DTC?
Ooh, I don't know exactly how it's calculated off the top of my head. It's there's what's called the working tax benefit now. It used to be working income tax benefit. So that is I kind of align it to a sort of basic income idea. So if somebody is working, but they're kind of trapped in lower wages, for lack of a better word, it's a supplement that the federal government gives to any taxpayer who is in that category. So, and it's on a sliding scale. It starts at a certain amount and it ends at a certain amount of working income. So I think if somebody also has a disability, it gets increased a bit. I don't know the exact math. I wouldn't want to sort of speculate, but generally what's called the working income benefit comes, it is part of the tax return and it depends on the working income. And there is some supplements to it for households and disability and stuff like that, but the exact numbers and calculations, I don't really want to try and do off the cuff like this.
Fair enough.
It's very different, right?
Yeah, absolutely. Next question. Originally, Shelby mentioned that the disability tax credit could be transferred to family members. Does the family member have to be living in the same household?
Not necessarily now, no. You just have to, if the person with the disability tax credit wants to transfer it to, the other person, their child or whoever it is, their adult child, you just need to write to the CRA and say, George Wilson, SIN number, blah, 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 address, blah, 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 wants to transfer his disability tax credit to Sheila Wilson, SIN number, blah, blah, blah.
Okay.
Address, blah, blah, blah. And if they can both sign it and send it off to the CRA, then the CRA will recognize it. And on Sheila's, for the example, for her tax return, it will be embedded in the CRA that she can claim some or all of the disability tax credit on behalf of a dependent.
Okay.
That makes sense. It sounds a little wordy, but
I find tax things are. Yeah.
But the concept is it has to be given away and accepted, and it has to be formally recognized of who is being given the credit. It's a little less complicated with kids and parents, but once people are adults, then they have to give it away and the other person has to be recognized as being able to receive it.
Okay, just scrolling through some of the questions. I remember you answering a few of these during. Here's another one. Is it worth it to apply for the disability tax credit if my mom doesn't earn enough income to pay taxes and I help care for her but don't live with her?
Probably. Again, it's hard to say. If you are paying taxes and you are looking after your mom, And even if you don't live with her, then yes, you could be getting some of the transfer over to you. So it could be quite useful. So again, this is where you would have to go to the doctor, or your mom would have to go to the doctor, fill in the form, fill in the part that says transfer it to you, send it off to the CRA, and then have it come back. And one thing on this, when you are doing it, is it can be retroactive.
Right.
Okay, so it is possible for you to do that now, still file your 2021 taxes in the regular way, get it recognized and approved by the CRA, because that will take several weeks, and then go back and adjust either this year's taxes in the fall or whenever it happens, and possibly past year taxes.
Right. Next question. How do you register power of attorney with Canada Revenue?
Oh, well, that's a very good question. And it's
five easy steps. Let's go.
a little bit of a black hole. So you can like write a cover letter and say, I have the power of attorney for, XYZ with their SIN number, and attach it all to them and mail it off. If you're in BC, it would be to the Winnipeg tax office, and eventually it might get processed. If you do have someone that is preparing your taxes, they can possibly send it off electronically. The POAs are, to be honest, are a bit of a hit and miss with the CRA, because some people I know have come in and said, oh, I sent it off, but still can't talk to them. So those are basically the two ways, either, and you can only do it electronically if you already have an authorization on the person to access their CRA account. But generally, you should be able to mail it off with a letter and see what happens. But it won't be, it will take time.
Of course, of course.
Yeah.
Will it make any difference to filing this year's taxes with the timing of putting in the application for the disability tax credit? Will Dad receive the credits for any retroactive years once the application is accepted?
Yes, it is definitely retroactive. And there is even a little box on the form that says, CRA, please adjust any back year taxes when you process this. So check the box to have them do the adjustment.
Okay.
But I would say, file this year's and then wait for the adjustments.
Sounds fair.
It could take time.
Okay. If all our prescriptions are processed by Blue Cross, can I just use the annual statement from Blue Cross to identify the amount I pay?
Yes. Yes. Yes.
Okay. Ideal. Somebody else mentioned as well that you can go to your pharmacy and get a printout of the year's receipts.
Yes, yes, yes.
Very handy. Yep.
Very good. Don't bother keeping all those little stuffs.
I know. Yeah, we have a box full of tiny little bits of paper just from the pharmacy.
Go to the pharmacy. Like it way better.
Yes. All right. My husband receives a monthly long-term disability payment that is non-taxable benefit. Am I correct that this income does not go anywhere on his taxes?
If it's non-taxable, yes, correct. If there's no slip or anything, then yes.
Okay. Are home health receipts for respite considered a medical expense?
I believe so, yes.
Okay.
Again, I'm, reluctant to give a definitive answer on everything without knowing exact situations and seeing receipts and stuff, but I would think so, yes.
Okay. This one's a little complicated. The person I care for and myself are paying legal defense fees for our jointly owned property. No. Can we claim this? Nope. Okay. Fantastic. somebody commented, I can't believe the CRA would allow any double dipping. I think that was in regard to the renovation.
Yep. The one time.
Yeah, it's pretty, take advantage, people.
Well, it's kind of expensive to redo your house just for a double dip on a tax, but
yeah,
if you're
seems
doing
like a lot
it,
of trouble.
if
you're doing it,
it's good.
Yeah. Someone else is just asking if you could clarify, did you say before that you can claim certain medical expenses, you must apply for the disability tax credit?
Well, nursing home.
Right.
The nursing home thing, which, as I say, is one of those bureaucratic things that the CRA insists if they ask for the receipts, which they often do because they're a lot. You have to either have the disability tax credit or a letter from a doctor saying you have to be there. But of course, you can't get in. It's not like you go check yourself into long-term care. So
yeah. Right.
I just find it frustrating that.
Yeah, it's classic. All right, so this one, my spouse has had dementia for the past 5 years. We never knew anything about the disability tax credit. Now she's been put into long-term care. Do I need to apply for the DTC for her now, even though she's now in long-term care?
Well, sort of. It's going to depend on like your income and stuff like that. Again, if you're claiming medical receipts to lower your taxes, they might ask for that claim. But if your income is sort of low enough that you're not really using the medical expense or don't need the medical expense, then you don't really need to. It's really only all about if you're going to get reviewed.
Right. Okay. Well, that's it for the questions that have been put into the chat and the questions that were sent to me by email beforehand. I'm just going to reach out to the participants left to see if there are any more questions. Oh, Carla just said 2 more questions came up. Okay, first one. If your parent in long-term care gets pedicures, dental care, haircuts, etc., can these be claimed under medical expenses?
Probably not some of those, the pedicures and stuff. Usually the care facility sends out a receipt at the end of the year, and it's pretty clearly stated what are called attendant care and what is not. So, or else it's just going to be the full 24-hour nursing care in the long term. So it's all about what is on the receipt from the care home.
Makes sense. All right. Once someone goes into a nursing home, can I still claim the caregiver tax credit?
Again, it kind of depends. Because it depends on income and things like that. It's probably a little trickier once they're actually in long-term care, because technically you're not really caregiving anymore.
Right. Fair enough. Okay. So. Another question. Well, they just keep coming, don't they? I've taken over live-in care for my aunt and her previous caregiver, her son, after he passed away. He used tax credits as her caregiver. Do I need to get another doctor's letter so I can receive her credits?
Yes.
Yep. It's kind of moving it from one recipient to another. It's all got to be paperwork in place.
Or even, because you'll get reviewed for sure, especially the first time that you do it.
Okay.
And again, if the aunt has the disability tax credit, I would suggest that you get it transferred into your name, or the recognition that it can be transferred into your name. That's a bureaucratic thing.
Another registrant commented, just an FYI, there are a few people in my wife's long-term care facility who did check themselves in because they were frail and didn't want to live on their own. But they don't require 24-hour medical care.
Okay.
So that might be one of those multi-leveled types of things. Yeah. that happens.
I mean, that is fair. I'm just kind of trying to
Trying to speak in basics here.
well, and then you know, these things that the CRA does that seem bizarre, needlessly bureaucratic.
Yeah, yeah. Something else that I wanted to mention, I'm the parent of a youth with a special need. In order for me to be able to set up a registered disability savings fund, I had to go through the disability tax credit application process for her with myself as the person benefiting. So just in case anyone out there has youth with special needs, youth transitioning to adulthood, all that paperwork's going to change when they move into adulthood and you need to do everything over again. But if you want to set up a savings plan, you need to go through and get the DTC. Yeah,
for sure. And those can be like a really good thing to do, but that's a separate thing.
It's amazing.
It's not really your tax. It's not really a taxable thing, but it's.
Yeah, but the amount of money that's come into that account since we started it, the government really does contribute quite a bit.
They do. Yeah, I have to say, you know, you can, whatever, I won't get political, but there are some very good things being done by different governments across the country.
It's true. Definitely. You've got to keep the politics out of it, though. This is all about caregivers.
Yeah, exactly. But yes, that's a very, very wise investment for people if they can manage it.
And even adults, if you're not an older adult yet, if you're an adult with a disability and you can manage to do that, it does rack up pretty quickly.
Yeah.
So, yep. Wow, Shelby, you have given us so much wisdom in such a condensed amount of time. You have fielded questions from all over the tax categories. I really want to thank you for the time you've taken, especially at this busy time of year for your business. Further to Janet's question, because Janet asked about the care home. If the care home has deemed you an essential visitor, meaning that you can come in daily, feed and clean, etc., your person in care, can you receive the caregiver tax credit?
Oh, I mean, I don't know for sure on that. Maybe. I would say that, I mean, you can prove it, right? If CRA was to ask. I haven't really heard of this designation of essential thing, but you know, that could well be true, because I know that a lot of the care homes and stuff like that, especially in the last couple of years, are really strained. So it does make sense that you would be able to justify that to CRA. I can't speak if they would accept that or not, but I think it would be worth a try.
I would think it would help if you could get something in writing from the care home that lists you as an essential care provider. As part of backing up that application.
Yeah. And you know, like one thing I will just say really quickly is recognition of some of these things in bureaucracies like the CRA and stuff, like recognition of reality. Like this is now the reality that family members are helping out doing the feeding and things like that in care homes, for instance. There's a bit of a lag. So, you know, I would definitely say try it and
see,
prove it. And, you know, I mean, I've gone to bat with things like that before. So there you go. And then people that do that, then all of a sudden things will start to catch up and stuff will reflect reality.
And consider you sort of helping to pave ground for others in similar situations, right? If you kind of poke at the door of CRA and they accept it, it makes them more willing to kind of look at that going forward.
Yeah. You know, and that's quite a really good point that person brought up, now that I kind of had a minute to process it. So yeah, I think that's I would say, do it for sure. And you know, get people across the country in your networks to
also
start to do it. And you know, because CRA, believe it or not, does kind of respond to some things.
Yeah, I believe it. They're like any bureaucracy, they do try their best, you know?
Yeah.
Okay, one last question's come in. As a live-in caregiver, can I write off any expenses such as a percentage of my auto insurance, fuel, cell phone, which are part of the essentials to caring for her? No,
not really. That would be pretty dicey. Yeah.
That kind of puts you in a position of almost being running a business.
Yeah. I would not do that, because like just the caregiver credit is what is kind of compensation.
Supposed to kind of, fair enough. Fantastic. Shelby, you've been amazing. As always, you have given us your time, you've given us your wisdom.
No problem.
You've been a big help to us and all the caregivers who were on the call. And then this webinar is going to be posted on our website going forward. So thank you so much.
Oh, well, you're most welcome. If I didn't ramble too much.
Oh, you actually stayed on point and you gave me a lot of information I hadn't known anything about beforehand.
Oh, well, there we go.
Thank you so much.
Okay.
All right, folks, that's it for us for today. Thank you so much for tuning into this webinar. Like I said, it'll be up on the website in a day or two's time. Thanks, Shelby.
Thank you.